Very much. Kobi, please take it away.
Okay, thank you, Johnny. We're very happy, all of us, to be here on this the FinTech Week Tel Aviv great event. Happy to speak and to be in contact and with plenty of people around the world and speaking about the Insurtech and the future of the Insurtech here in Israel and around the world. So with us a great panelist together with me. So we will start to introduce ourselves for a short while. So let's start. Andrea, please introduce yourself.
Hi, Kobi. Thank you for the invitation. It's a real pleasure to be here. Hello, everybody. My name is Andrea Birolo. I'm the head of corporate venturing in Reale Group. The corporate venturing is one of the 5 departments that are supporting the transformation path of the group. I've been working for the group for 16 years, and previously I had the opportunity to work in different companies of the group, mainly in commercials and sales roles. I'm a passionate for innovation, and I'm very curious about how the traditional insurance model is changing and will change in the future. Couple of words about Reale Group. Reale Group is an insurance and financial group operating in Italy, Spain, and Chile with a turnover of over $5 billion. Thank you.
Thank you, Andrea. Let's go to Ofer.
Yes, hi everyone, and thank you for inviting me. It's a pleasure. My name is Ofer Brandt. Currently, I'm the chief actuary and senior deputy of the commissioner at the Capital Authority in Israel, overseeing the financial institutions and insurance companies. Before that, I was serving in almost 19 years as chief actuary and member of the management board and executive VP at Clal Insurance. And before joining Clal Insurance, I worked for 12 years in the UK as an actuary again with the insurance company, and then the other 6 years with the consultancy. And in between, before I've joined the capital markets and after leaving Clal Insurance, I've advised the startup companies in the Insurtech area, which was quite fascinating, and which is why I've taken on also the responsibility of insurance innovation at the authority as well. So here we are.
Thank you, Ofer. And now to Gilbert, please.
Thank you, Kobi, and thank you for inviting me also to this panel. My name is Gilbert Ohana. Today, I'm a managing partner of FinTLV Ventures, along with another 3 partners of mine. FinTLV Ventures is a venture capital fund based in Tel Aviv. We specialized in Insurtech technologies mostly. We do investments in all stages, and we look for the right.
Oh, it looks like we lost you, Gilbert.
Yeah, I'm back again.
We lost you for a second, but you're back again. Please.
Okay, so FinTLV specializes in Insurtech. I think it's the only VC in Israel that specializes in this domain. We have a deep expertise around the Insurtech and on technology and on the investment itself. In my background, I'm coming from a technology background. I served 26 years in the Israeli intelligence corps, all kinds of technology positions, and I've been the chief technology officer of one of the units. So I got quite an extensive experience of technology around cybersecurity, data analytics that I can bring to the fund.
Great, fantastic. So we have a variety of expertise, knowledge, and experience here around the table. Great stuff and great experience. So we will start with our questions. So, just before it, if you have any question to the panelists, feel free to ask them during the chat by the chat bar in front of you. So we will start with you, Gilbert. FinTLV Venture was very active in 2020. as a global venture capital fund that invests in Israeli and globally. What trend do you see in the insurance market and the tech sides and the business sides?
Yeah, so indeed we had a great year 2020, although it's maybe the worst year ever, at least in the last century for humankind in terms of the pandemic. But in terms of the fund, it's been a great year. We've made several notable investments like Next Insurance and Hippo. But if I'd like to speak about the broader market and trends, I think it is important to understand what the pandemic brought to the insurance market. There is a report, for example, of Boston Consulting Group that says that although the total losses of the insurance business in 2020 summed up in $55 billion, the insurance market itself have moved forward like 5 years in terms of innovation. Okay, so there is a lot of different aspects of the insurance market. And in that, it's been like 35% growth for digital insurer. So of course, the whole digital promotion that was supported by the pandemic took also high place in the insurance business. We see a lot of digital services provided by all kinds of insurers all over the business processes, from underwriting and pricing and claims management in different kinds of aspects. In terms of investments, it's also been a great year. I think 2020, in terms of total investments, has been the greatest year so far, with about $7 billion invested in new companies and in Insurtech companies. It's slightly higher than 2019. So it's for the future, 2020 was a great year for the insurance. I think that in terms of the main business trends,
yes,
we see a lot of risk prevention technologies and services. Insurers are looking to utilize technologies that can reduce the risk and even prevent all kinds of disasters. Of course, we see the cyber insurance market is like booming. A lot of cyber insurance companies, a lot of technologies. I think this will continue to grow. I think we're seeing a lot of personalized offering that companies can provide either to consumers or to SMEs, for example, specific underwriting, personal products and premiums. That is, of course, supported by the digital trends and all kinds of AI and machine learning technologies.
Fantastic. Thank you for your insights. Ofer, last year you joined the Capital Market Insurance and Saving Authority as both chief actuary and senior deputy of the Commissioner for Insurance Innovation. So you are the right person to ask him, what are the steps that the Capital Market Authority take to encourage innovation in the insurance industry in Israel?
Right. So one of the goals by statute, actually, for the Capital Market Insurance and Saving Authority in Israel is to advance and encourage the implementation of technology and innovation. So within obviously the financial institutions under the supervision of the authority. And we take that very seriously. I mean, we want, and our goal is indeed to encourage the market to introduce that innovation. And as you mentioned, my role in particular is to focus on the innovation in insurance, because the authority is also supervising other institutions, not just insurance. It's supervising pensions and provident funds and so on. So the Capital Market Authority has published in the past a general position paper on the subject of innovation in insurance, and specify the views regarding introducing the technology and innovation within this institution. So it is really important for the capital authority to ensure that insurance companies are taking real action and real steps to enhance and improve internal processes and other digitalization of processes by introducing innovating technology. Because otherwise we know that if they're not going to do that, then they're going to really slip behind the pack. And we want to prevent that, of course. So by doing so, we want them to improve the quality of service to the policyholders, to streamline the management and the operation activities, and so on and so forth. So these are all positive. And there's no conflict of interest here. It's all in the same interest of both the companies and the regulator. In recent months, the Capital Authority has also published some supporting circulars to that general position paper, and introduce a few actions which are spreading in various areas, if you like. One of them is via the relaxation of investment regulation, because investment regulation normally limits the assets and investments the companies can invest in. And that's because of different reasons, but mainly to ensure that there is enough distribution and there are not too much of concentration of assets in one particular investment. So, for example, there's a maximum of 20% investment in a particular company. But we published, the authority published a paper to say that this could be increased beyond the 20% if, and subject to the fact that the investment is in indeed technologies that are in line and aligned with the strategic aims of the companies in order to improve their own business. Mm-hmm. So obviously the companies have to submit and show that this is indeed the case, but still we do allow that in order to encourage that. Another example of what we did was to, not a while ago, to publish a Solvency II capital relief paper in respect of investment in technology, which would again allow for the streamline and the improvement and the processes and all that we mentioned earlier. In particular, in investment in data analysis of AI and machine learning. Another example is remote identification technology, or IoTs and wearables and such. So if companies would be able to show us that this is indeed technology that they are going to invest in and implement within the company, then we will be able to provide them capital relief to encourage that, because we think it is important. Another area which is being reviewed at the moment is the setup of Better Sites platform. It hasn't been published yet, but I can disclose here that we are thinking about it. And the platform aim is to marry up the both ends of, if you like, of the market, the startups and the insurance companies, and ensure that the dialogue between the two is constant and it's flowing, and there are both advantages. We can see advantages in that platform for both the startups and the insurance companies. For the startups, of course, the Better Site is a place where they can test the technology and the model of the business. And for the company, again, the companies would be able to gain capital relief, that we would be able to provide them targeted regulation relief, and in some areas that we have to obviously examine. And so we both parties would be gaining from such activity.
Yes.
And we're hoping that we'd be able to promote that as well.
Yes, I can say that the regulator here in Israel is very supporting the ecosystem. Our Insurtech Israel just opened an accelerator program here in Israel with a lot of support from the regulator. and the authority. It was great. And now we are going to speak with Andrea. Andrea, hello. Hi.
Hi, everybody.
Hi. Hello from Milan. So Andrea, what are your expectations for investment in Insurtech in 2020, and what role can you see for corporate venture capital? You came from CVC, so it's a very interesting to hear and to understand how it's operated and what is your expectation.
Yeah, well, first of all, I totally agree with the vision of Gilbert that Gilbert shared with us before. Well, my expectation is that the Insurtech VC investment will revert to higher levels, firstly driven by insurance distribution marketplace and intermediaries in 2021. And the reason behind the statement is that VC investment in companies slowed down in 2020 after years of growth. I largely attribute this slowdown to the COVID-19 pandemic, since broader insurance industry faced unprecedented losses. But anyway, the pandemic also pushed the acceleration of digital transformation within the industry, as insurers increasingly relied on online and digital services to engage sales to customer, underwrite and service policies, and settle claims. So in my opinion, Insurtech companies will likely benefit from this acceleration. The problem for Insurtech on the other side is that incumbent insurance companies that invest in Insurtech companies could pull back capital if claims and reimbursement related to COVID-19 will affect the net profits of the sector. And additionally, the traditional insurance company that typically partner with Insurtech could choose to develop technologies in-house as they become more technological proficient. The venture investment in Insurtech companies started strong in 2020 with something like 400 million just in January in 2020.
Wow, it's amazing.
But as COVID-19 spread, several investors held back investments in a volatile and uncertain market. And the first quarter of 2020 posted loss less than 900 million in investment. That is something like the second quarter of 2018. But anyway, investment recovered toward the end of the second quarter and into the third quarter. I expect that strong investment trend I expect that this trend will continue in 2021, partially driven by non-traditional for the VC market investor. For example, the corporate venturing arm of insurance companies. And while non-traditional investor pulled back from participating in VC investment during the global financial crisis in 2008, the corporate venturing arms of insurance companies have remained committed to Insurtech investment during this pandemic. And this is important. And notable deals with non-traditional investor participation include, for example, the Series E of Next Insurance with the Mitsui Sumitomo participation, or the Series D investment in ACO by Allianz. So these deals validate the fact that insurers are getting better at understanding innovation initiatives and the strategic value that they are bringing into the business.
Great. Very interesting. I have a question, another question for you, Andrea. Can you see any barrier that coming from the startup to get investing from CVC?
Well,
sorry for the hard question.
No. Barrier coming from the startup. So I think that the most important barriers are in the traditional insurance company. The biggest barrier is the IT infrastructure, technology. Okay, so every insurance company is trying to transform itself, saying that digital transformation is top priority, a strategic top priority. Okay, saying it is one thing, and execute it is another completely different thing. And I think this is the biggest caveat for the insurance companies. It's not a problem of Insurtech. I think mainly is
so you don't see any barrier and problems that coming from the startup to have a CVC or insurance companies money or directors in the company. You don't see any barrier.
But what we are trying to do in the CVC here in Reale Group is to support the transformation path of the group. Okay,
that's fantastic.
And in order to do this, we are also trying to create synergies with external startup and to make direct investment into the equity of the startup. But we do it for strategic and industrial reasons. So first of all, I need to understand from my internal business stakeholders the problem that they are trying to solve, which problem the group is facing, okay? And then I'm going into the market in order to search solution, viable solution that's, startup or scale-up companies are trying to develop. And we used to create industrial synergies between us and the startup. And so far, the experience we made so far is that this is how can I say, a valuable process both for the incumbent and for the Insurtech.
Yes.
So I think that if traditional insurance companies and Insurtech are able to cooperate, to collaborate, to identify a viable way to create synergies, this could be useful for both.
Okay, thank you very much, Andrea. Now, Gilbert, as a VC focusing on Insurtech, as you mentioned in your introduction, what do you look for in startup when you when investing? Can you tell us about interesting investment that FinTLV has made?
Yes, absolutely. So first of all, maybe just to complete what Andrea said, I think that maybe, Kobi, you meant that if a startup wants to have a CVC investor, like it might, prohibit him or make it difficult for him to work with other insurers.
Yes. Mm-hmm.
So it's an issue. I can tell you that it's an issue. But if you find the right partner and you formalize the right investment mechanism, I think also the CVC realizes that these startups eventually needs to grow and reach new customers and reach other markets and opportunities. So if they are smart, they will not, prohibit him from working with other companies. So it's all about making the right connection between the startup and the CVC and the company.
And in the end, it's people.
And in the end, it's people. I totally agree. Yeah, it's when it comes down to investments, it's all about people. I think that
what are you looking in a startup when you start to investing?
Yeah, so you need to remember that we invest in all startups in all life stages of the startup. Some of them might be early stage, some of them might be late stage. So it's different kinds of criteria. Of course, the team is always important, right? The team is always important. That, of course, any VC will say that. It goes without saying. But I think when we look on an early stage company, we want to realize and be sure that it has something unique to the insurance market, something that will really disrupt the way the business is done and the way the processes are working. Not just incremental achievement, but something very more sophisticated, more deep, transformational to the insurance business. And we are looking for such companies in different kinds of areas around the insurance. We also look for companies that have value for the insurance market, even though they are not specific Insurtech companies. So digital health, for example, might be very relevant to the insurance market, and many companies are today looking to provide more digital health services to their customers, help them live better, help them manage sometimes diseases that they have. And we look for such companies that their solution and their offering can be utilized in the insurance business. We've made one investment in digital health company just about 2 months ago, an Israeli company called Switch, which is not an Insurtech, digital health. They have an AI-based platform that manages chronic disease um, prevention and management, right? Because you need to make you can prevent such things from bad things from happening, and when they do, eventually, the insurer and pharmaceutical companies are helping the customer to manage their chronic disease status. So Switch is a great company. It's a huge market today, just by the pharma market. And if we add also the insurance market, it's a huge, huge company, and we have great expectations for such a company. The other investment that we did about half a year ago was with Corvus Insurance. It's a US-based company. They are doing selling cyber insurance for SMEs, and they have really, really deep understanding. So this is also one of the most growing segments of the insurance. It's like under capacity today. It's only growing by 20-25% each year. So we have also great expectations with the company and their ability to be a key player in the US market.
Okay, thank you, Gilbert. Just because we have a very short time, and I want to ask Ofer and Andrea another question, so I will ask Ofer please answer shortly. Actuaries have a major role in insurance company, both in product design and product pricing. In the recent year, many of the new Insurtechs companies use AI and automatic process which perform many of the traditional actuary rules. So as the chief actuary of the authority, how do you think the actuarial rules affected, and what can actuaries do in order to improve and introduce in technology innovation in the insurance industry? And please, in short.
Yeah, okay, so I'll be short, and thank you for this. You see, there were many statements in the recent year that technology is so advanced that it would replace the role of the actuaries, in the sense that it would take over because the computers would do a lot of the work. And that's, as an idea, everybody would connect to this because we see that the computers are doing quite a lot of different jobs that in the past that they did not. So many jobs are being replaced. But my view is that this is not the case. This is not true. And in effect, the actuarial role within the companies is such that the role is being strengthened in the sense that they are using the technology in order to enhance and improve the work. So if you take, for example, the machine learning and AI, which is obviously a very core, if you like, role of the actuaries, data and analysis and understanding the data, both for internal and external, marketing and whatever you want, pricing and so on and so forth. So this is obviously something that actuaries are mastering in and adopting this technology in order to being able to improve their own work. And in effect, in many companies, insurance companies around the world, companies set up data analysis departments headed by actuaries because of their understanding of the different processes and the value chain of the company and how they can employ that within the company. And similarly, I've seen quite a lot of startups doing the same. They're employing quite a lot of actuaries to help them understanding the different processes and see how they can marry up the business model into the insurance industry, which is what I've been doing also for about 2 years with startups as well, and that was really fascinating. So definitely, actuaries could do a lot in order to get into this space and to help both insurtechs and insurers to advance, and no doubt.
Thank you, Ofer, for your answer. Andrea, we have a question from the audience. Tom Allen, the founder of the El Journal, asks you, new business and startup are pumping up in many different sectors and industry, most of which need insurance. What do you think will be the key risk of tomorrow from leads on new startups that will need to be considered before insuring?
Sorry, Kobi, I lost a couple of seconds of the question. Can you just read?
Okay, I will say that new business.
Andrea, maybe you can look at the
You can look at the Q&A, and but I will ask it again. New business and startup are pumping up in many different sectors and industries, most of which need insurance. What do you think will be key risk of tomorrow for lots of new startups?
Well, I can bring the point of view of an European, but mostly Italian corporate venturing arm of an insurance company. And so far, what we can say is that most of the insurance problem that startups are putting on the table are connected with the new way of mobility here in Europe. So here in Europe, there are a lot of operators that are trying to create a new, in a way like mobility as a service, create a new ecosystem for customer. And from my point of view, and based on my experience, the biggest problem here in Italy, but in Europe, is to try to support this type of business model in creating a specific insurance offering for this segment, for this sector.
Fantastic. So thank you, Andrea. I see that we have spare time or enough time. Maybe we'll do one more round of questions. Gilbert, is everything okay with the internet?
I'm okay. Yeah.
Okay, great. How do you see the Insurtech landscape here in Israel? Is there any trends and something that can be improved or implemented in the insurance world soon?
Yeah. So basically, I think the Insurtech market in Israel is developing very fast for the last couple of years. Mainly, it's still quite in early stage. I think when I compare it to fintech or cybersecurity, so many companies are in Israel, and still not so many around Insurtech, but the number is growing year over year. I think that maybe, for example, in the US, most companies are more business oriented. In Israel, we are more technology oriented, but that is always also changing as the founders of new companies realize they need to understand the insurance business deeper and deeper, because insurance is complicated, right? So this is also evolving. You need to remember that we have in Israel so many other technologies that are not called Insurtech and still are very much needed in the insurance business. Okay, so I talked about the digital health, but AI technologies, IoT technologies, cybersecurity technologies, these are all companies and technologies that can be utilized and improve the way the insurance business is done. So I think that insurers also need to explore these opportunities. there is some kind of again two statuses of the Israeli market, because on one hand the Insurtech domain is quite early stage, but you need to remember that some of the world leading Insurtech companies have been generated from Israel, like Hippo Next Insurance and Atbay on the cyber insurance domain. So we have the ability to take
Lemonade and Ernix.
Lemonade, of course, and
And-
Ernix, of course. So I think the Israeli market has the capabilities of becoming a world leader in Insurtech. It's just need to be more matured in terms of combining the right technologies with the business models and the business understanding of the Insurtech insurance domain. But this is changing and growing from year to year.
Yes, I think we see in Insurtech Israel a lot of improve and great activity here in our ecosystem. And I agree with you, Gilbert, that the ecosystem is still early stage, but there is a lot of good startups in the pipeline. We can see definitely AI and cyber insurance, a huge activity and growth in that sectors, and of course in claims process and fraud detection. This is the main business here in the Insurtech Israeli. There is more than 200 Insurtech startups here in Israel. 200.
Right.
It's I think it's one of the biggest areas in the world. So very happy to have it. Ofer, let me go back to you. In which area do you think insurance company may need to think over the innovation development?
Well, the issue is that we do have we need to look at both parties, the insurance companies and the Insurtech. We talked about the insurance companies, but when we look at the Insurtech startups, I think that first of all they need to explain to themselves and define to themselves whether they are enablers or disruptors. Because disruptors normally disrupt the market. They aim with doing something which competes with the business day-to-day of the traditional companies. And then we see that there is a big, if you like, clash of interests between them and the traditional market. For example, look at Lemonade, which is competing with the traditional market, and so on and so forth. And in the other hand, you have the enablers, those who would enhance existing processes so that they would be able to enter the traditional market and improve processes in introducing new and innovative technology. So that's one thing that I think the companies need, the startups need to explain to themselves. And secondly, once they have a technology they think that might be of an advantage, then I've seen from quite a lot of instances that there are great entrepreneurs with great knowledge of technology, but very little knowledge of insurance. and therefore, there is a gap created between the Insurtech startups and the industry. And therefore, they have to have that gap bridge, if you like, either from inside by recruiting someone who's advising them, or external, it doesn't matter, that would teach them to speak the language and be able to connect and therefore to cooperate with the industry and successfully. And that's something which is very important to my mind, because I've seen that quite often, that I had to change even the business model of the startups to explain that it's not doable, it's different. You have to think over your model. Although I didn't want to spoil the model, of course, because sometimes you can kill it, and that's not an achievable target. But yes, of course, we want to make sure that they can enable and enhance and improve the business.
Great, Ofer. Thank you very much. Our editor is waving me that we are going to the end. So just in a short sentence, or one sentence, Andrea, do you want to say something to the audience? Something that you want to add? Or just say hello, goodbye?
Just say hello, goodbye, and thank you again for inviting me. And let's see in the future how Insurtech is going to change things in the insurance sector.
That's great. Gilbert?
No, it's been fun, and I think that joining what Andrea said, I think there is great opportunities for Insurtech. This is just starting. It's like, as we now talk about FinTech, which is most understandable to most people, so Insurtech will rise just the same as FinTech and will be very much needed.
Thank you, Ofer. So as you see, Ofer, our editor is jump up. So I must pass him the lead. So thank you very much, Ofer.
Thank you very much. Yeah,
Gilbert,
it was a pleasure.
and see you soon here in Israel.
Sure.
Thank you very much, guys. I'd like to say thank you for joining us. That was a thoroughly enjoyable and insightful panel. Thank you for sharing your knowledge with us. Kobi, Ofer, Andrea, and of course Gilbert. Gilbert has been a close partner to FinTech Week Tel Aviv for many years now, and we really appreciate that. So thank you, Gilbert, for all your efforts. Please, if the audience could give their appreciation, we have an emoji button at the bottom, which you can give them a good virtual round of applause. Thank you. Oh, look at that! They're loving it. Thank you, guys. Next year, inshallah, we'll do it in Tel Aviv. But we managed to survive with all the technical issues. But thank you very much, guys, and we will see you very soon.
Thank you.
Thank you.
Thank you.